Hi everyone, welcome back to BeRich. It's me, Vinod, recording remotely from Paris. I have Anand with me, but he's already done 2 videos and he's a little tired, so I thought I'd give him a break. Yes, we did travel 24 hours to almost 30 hours to reach here. And thanks for all the feedback you guys gave me about my last video, where I was pretty out of my mind sitting and recording in Delhi airport. And I did manage to get a few words in about what the Fed was doing. So, building on that and taking it further is what I wanted to do today and talk about Eli Lilly and Eli Lilly's performance and what's happening in the IT companies, especially Meta, Google, Microsoft, and where this AI is heading. First, what is the Fed signaling? Fed is signaling there is weakness in the job market, so for that he is reducing the interest rate. But then he went on further to say that there's completely lack of data now. Thanks to the government shutdown and the hostility towards the Fed, there seems to be really no data points for him to work with. This is what has led to him saying in December, we'll have to wait and watch till we get a lot more clarity on what is really happening in the American economy. Do remember, there are two prongs for the Fed. One is, of course, job creation, which was added on recently, but the primary goal was always to control inflation. And inflation being above their mandated 2% is now at 3%. Though the media is playing it down, saying it is much better than expected. It was supposed to be at 3.1, it is at 3. It's not still good news because inflation 3% is still very high. So taking that into consideration, the Fed is trying to balance between the job and inflation. And that is a very tough position to be in, being the Fed. Because the reducing of the interest rate has increased liquidity in the market, and you can see that by the mere fact that the AI stocks have again started revving their engines, and you've seen NVIDIA becoming a $5 trillion company. Imagine a single company being bigger than the Japanese stock market, which is kind of showing you the pace at which this exuberance in the market is running. Have we run out of steam? No. We are far from running out of steam in this market as far as AI is concerned. Yes, like I said in the previous video, it is very hard to understand which companies are going to be left standing and where AI will finally evolve to be part of our human part, society that is. Was it going to be finally robotics, robotic AI? Is that the final fusion which will take AI? Don't know. And it's very hard to see which companies are the ones that are going to be standing at the end of it. Case in point is in Meta itself. Meta had fabulous results and they came out saying we did very well and we're increasing our capex in AI. Market immediately started correcting Meta stock price and Meta fell by almost 10% or more. That is to show even the market is feeling rather nervous about this exuberance in AI. Google has also increased their capex and Microsoft is increasing their capex. There seems to be an AI race going on at full fuel. So we have to wait and watch. When we do see these opportunities opening up in companies like Google, companies like Microsoft, I would say we can dip into them. Companies like Meta, I would rather not touch, even if it does correct. For the simple reason, they seem to be very reliant on AI. If you do remember, not in the recent past, Facebook did not do great, and he's been acquiring companies like WhatsApp and Instagram, and those cash cows are also drying up. So Zuckerberg is really trying to pivot and gain some kind of momentum behind Meta. His metaverse failed, so he does have quite a few of failures behind it. So I can understand why the market seems a little hesitant, even though he seems very gung-ho and saying he's preparing the groundwork for super intelligence when it comes. The question of super intelligence is another kettle of fish which I don't want to get into, and that I shall leave aside for another video another day. But on the other hand, companies like Amazon, companies like Microsoft, companies like Google, with their cloud and expansion in cloud and the revenue growth in cloud, that seems to be more of a stable area for us as investors to look at. So if you see opportunities in Microsoft, in Google, when the markets do correct, that is something to keep in mind. Now looking at Eli Lilly beat market expectations, it blew them away and the stock prices zoomed further. Eli Lilly is a great company and it would have been wonderful if we entered Eli Lilly at a price which was reasonable. Even some time back, Eli Lilly, when I spoke about it, was very expensive. So it still maintains that for me. Do realize these drugs are now already the horse is bolted out of the stable. So yes, we can lick our wounds saying we should have bought Eli Lilly, but now to buy Eli Lilly won't be a wise thing to do. So I would strongly suggest not dipping into companies which are already at extreme high valuations, especially in the pharmaceuticals, because once somebody starts copying it and it cracks, then the next drug has to prove itself and it has to ride through a cycle. So if you are interested in these pharmaceutical companies which are highly overvalued right now, I would suggest you first deep dive into what their product line is and the prospect of these product lines going forward before you decide to dive into it. That said, companies like Novo Nordisk is a company which is still there on my radar, and I would strongly suggest that you look at that. Market seems to have beaten that company in the short term. In the long term, Novo Nordisk is a massive company with almost no debt, and I would suggest that is something we can keep in our radar as far as pharmaceuticals are concerned. A lot of you have been talking to me about Chipotle. Chipotle has been beaten thanks to their earnings, and I would strongly caution against stepping into Chipotle as of now, not to take this as a correction. As far as the brand is concerned and the product is concerned, yes, they do have a very strong brand and they have a great product, but I would suggest that we need to understand more clarity on how they plan to restructure their recovery before we look at Chipotle. So this is what I am standing at right now as far as American stocks are concerned. And as far as gold is concerned, gold, I would say, is at a pause right now, and it is giving a respite for people in the market. If you need gold, if you don't have any gold in your portfolio, it's something to consider to add more gold. But if you already have plenty of gold in your portfolio, I would strongly suggest not to get carried away with this correction and market news, and keep this as more as a macroeconomic news. What it's showing you is central banks are still consuming gold. Even recently, Australian central bank is talking about gold. So that shows you that even close allies of the Americans, who have been historically allies of the Americans, have their question when it comes to the dollar, the American dollar. So the world seems to be moving more and more towards a situation where dependency on the dollar will be lower. And even the trade deal Trump had managed to broker with the Chinese, that is also evident. A lot was said, and he is, in his famous styles, doing a sales pitch and saying how great he has done. But if you really look in the weeds of it, the Chinese really haven't given much, while the Americans have given a lot more, reducing the tariffs on China and coaxing them into saying 1 year at least give us some, rare earth and help us with this. And the president of China saying okay to a little bit seems to be all that's been coming out of it, though Trump seems to be playing a lot of fanfare to it. And the market is showing that, the way the American market moved, especially after Trump announced the Chinese deal. So for the next few months, we'll be getting closer to Christmas, but the real crucial is going to be the first quarter next year when the Americans get a new Fed chief, and then we'll have to see what really happens as far as monetary policy is concerned. So I would say be cautious, be sure where you're knowing where you're placing your money. A lot of you are messaging me and asking me, should you be waiting in the sidelines and not participating and wait for a major correction to step in? I don't know. From whatever I've understood a little about investing, I would say being consistent investing in small amounts pays greater dividends than trying to do lump sum at huge market corrections. Yes, for someone like Warren Buffett or Charlie Munger or George Soros, these kinds of big investments and huge corrections make sense. We are very small retail investors, so I would strongly suggest investing little every time the market gives you an opportunity. We're better off. So if you're interested in our views on American companies and American stocks and Japanese company and Japanese stocks, do reach out to me on Instagram on the Google form which is there in my profile, and I'll try and get you sorted out with my team. Thanks for watching BeRich today with me. I'm, like I said, recording from Paris. For the next few days I'll be in Paris, so I'll be recording like this. Then we'll be moving on to London, where we'll get to have a few more conversations from there. Shashwat is with me. He's off camera. I'll try and coax him into doing a video with me tomorrow if he has a bandwidth. Other than that, nothing else more to say. Have a wonderful day from all of us here in Paris. Au revoir.